Good evening, everybody. This is Andy Pedraza with Special Effects Academy on the start of the week session for the week of September 23rd, 2018, last full week of September. And with that being said, we're going to jump right into our usual agenda. We're going to be looking at the prior week, currency strength meter, fundamental announcements, our major peers analysis, any setups in progress, and a few parting words as usual. We're going to be starting out with our long-term ledger. As usual, we have the trades that were open, closed, adjusted, circled in red at the bottom. So I'll be going over everything here. Pound JPY, of course, took us out at a steep loss. We took 260 pips negative on that one. It was a really good trade in retrospect. Unfortunately, the markets do behave irrationally now and then. There was no reason for the pound to get stronger, yet it did. You can't argue with the market, so that trade did hit our stop loss and took us out. Since then, however, the pound has returned to its regular course, and we've regained some of that, and in fact, we're well underway to regain the bulk of that with the open trades that we have on the long term. So that one trade definitely hurt, but not a devastating blow, of course. We never risk too much of the account on any one trade. The next trade is the USD Swiss short, also at half a lot position size, and that one is at profit right now and heading in our direction as the Swiss travels across its usual channel from parity 1-to-1 with the dollar towards the mid-90s. I'm going to say the 0.94 to 0.92 is basically where it likes to hang out. Folks, if you're not actively speaking, I do ask that you mute your phones because I am starting to get some background noise. Thank you. Moving on, the next four trades, Euro CAD, Pound JPY, Pound CAD, Euro New Zealand, were sort of tentative. We did get in at a half our normal position size. They ended up being quick in and outs as they either worked in our favor, most of them worked against us, most of them, or worked in our favor. The one trade that did was the Pound Canadian. We recovered 40 pips there, but still that increased our loss by another adjusted about 50 pips on top of what we'd already lost with that Pound JPY. And then we have our four open trades at this time: Aussie JPY, Aussie CAD, Euro JPY, Euro Pound. The Euro Pound and USD Swiss, I know, were at profit. The other three were reasonably flat at the end of last week. Some of them have already started moving. I think Euro JPY is the main one that is going slightly against us, again, not by a huge degree, but it is moving into Japanese weakness as opposed to strength, which is what we're playing on right there. It's still far away from its expected stop loss and this, that, and the other. So that one will be allowed to continue. And the USD Swiss and the Euro Pound are probably going to give us a decent week. The two Aussie trades, Aussie JPY and Aussie CAD, they're probably going to give us a steep win as well, since it's a continuation of the downward trend on the part of the Aussie CAD, a continuation of the downward trend that the Aussie has been having for quite a while. The Aussie JPY is, however, trading into Japanese weakness, which is what we're seeing to some degree in the market right now. I have to be a little bit more careful with that one, as the wind in the Japanese sails may shift at any moment with the troubles going on in Europe right now with Brexit. So we'll be keeping a close eye on that one. Indeed, that one may be adjusted or closed if I get nervous to any degree on that one. So that is our long term. We're still up close to 30%. We did, of course, give back a chunk of that. We were close to 40% last time we closed the month. But that Pound JPY trade, as I said, did move significantly against us. We're probably going to be entering more Pound long-term trades as the week goes by, especially now that the trend has reestablished itself. But too soon for that right now. But I'm fairly confident that we will be recovering those pips pretty soon. Moving on to the short-term account, we did have a pretty decent week. It started very weak, not weak to a big degree. It was actually a very flat week through Wednesday or Thursday. We were down maybe 25, 30 pips for the week at that point. And then we had, of course, the pound reestablishing its weakness across the board, thanks to some disparaging comments from the Eurozone towards Britain, as well as a firm rejection of Theresa May's checkers plan, which is what they were trying to do to not have a hard Brexit. It's negotiations on the Irish border primarily, and the Europeans soundly rejected that approach. So it's back to the drawing board. There is a tight time frame. If they don't have some sort of agreement in the next few weeks, then it's going to be very tough for England to actually negotiate anything other than simply saying in March, okay, we're out, and then figuring it out along the way as to what that means. So they're between a rock and a hard place right now, which woke the market up to the fact that they had been betting on a decent Brexit negotiation, I'm going to say, for unknown reasons. I mean, there was nothing in the news to even suggest anything like that. But that was the market sentiment, that they would be negotiating something not too unfavorable for the Brits. Those hopes were dashed last week, and all the pound pairs simply collapsed into pound weakness. And that was the end of our week, and basically turned the week around to where we made growth of more than 5%, 5.29%. We picked up about 155 pips. Again, most of those were picked up on the last day or two. Actually, on the last day on Friday, when the pound, when Theresa May gave a speech, and the pound completely collapsed early in the morning, Eastern Daylight Time, more towards the middle of the day in England. As you can see, we had 7 wins and 8 losses. No trades were left open throughout the weekend. And this is proof of what I've said a couple of times. You don't need to be right more often than you're wrong to still make profit. It's more how you manage your equity as well as how you manage your trades to let your winners run as deep as possible and cut your losses short. The only other trades that I would like to highlight is that we did manage to take a few pips out of the euro dollar, and we did that twice. We actually took the same pips twice as the euro dollar moved in a very tight sideways pattern of about 50 to 70 pips up and down. So those trades also helped out for the week, and I'm grateful to the euro. Anyway, that is the short-term ledger, and that covers our account reviews. Our notes and opportunities for improvement. As I said, it was a decent recovery week. The pound finally came back to its senses towards the end of the week, thanks to Brexit and Theresa May. I do expect to be more pound woes as the weeks go by, as opposed to good news for the pound. So we'll be continuing to trade it towards pound weakness. The Canadian, the loonie, benefited from oil price hikes over the week, so we had a stronger Canadian for the most. And this was definitely, this week that just ended, was definitely a fundamentally driven week. While we did have technical signals, and some of them played out quite nicely, the major movements were due to fundamentals and nothing actually going on from a technical perspective. Trades remaining open over the weekend, as I said, none. On the short-term account, the long-term, you already saw what we have. Relative strength meter for this week, we're going to be looking at the week that just ended as well as the week immediately prior. We see that volatility increased very slightly, about 0.5 percentage point. And we can see that the Aussie was one of the major winners throughout the week. We had some good Australian retracements, a couple of which we played in both directions. So we made some profit, we lost some. But the Aussie basically did well against everybody except the Kiwi. The Canadian did well against everybody, as I mentioned, due to oil price hikes, except the Kiwi and the Australian. The Swiss was pretty middle of the pack, but more importantly, it did strengthen against the dollar. That's one of the 3 pairs it strengthened against: dollar, pound, and JPY. And we are in a long-term trade in that direction with the USD Swiss, so that worked to our benefit. The euro very sideways, and like I said, we took the same pips twice with the euro thanks to a sideways movement. However, it did end up in middle of the pack, doing well against the Swiss dollar, JPY, and pound, and losing ground to the Kiwi, Australian, and Canadian. The pound was the overall loser for the week, as you would expect, given what I've just finished explaining. So it did depreciate to a large degree against pretty much everybody. The JPY fared only slightly better. It lost ground against everybody except the pound. Clear winner for the week was the Kiwi. It appreciated against everything else out there. Dollar was middle of the pack as well, gained ground against the yen and the pound, lost ground against everybody else. And we see that silver had a middle of the pack week, and so did gold. So the bullion, the metals, are pretty much staying sideways. They're going up and down, not really picking a direction. Bullion tends to get stronger as currency depreciates or as there is some sort of economic concern. And right now there is concern, but it's going in both directions, which isn't helping the metals market. The only thing I can say is that clear loser from last week, the pound, is probably going to be the clear loser for this week as well. So we'll try to get into that as much as we can. I'm not sure that the New Zealand and the Australian are going to continue that drive. That seems to be a little bit artificial to me, as there is no reason for them to have done that. So we'll be looking at opportunities to short those two currencies if we do see a decent turnaround in the beginning or at any point really of the week. And with that, we move on to our fundamental announcements for the week. This is going to be a busy and very interesting week. We have the Bank of Japan monetary policy meetings tomorrow in the evening, 10 before 8. Not sure that I'm going to be trading that one live, but since we do have our regular 8 p.m. session, I'm sure we'll be picking up some of the pieces of that tomorrow. More importantly, Wednesday, we have the Fed interest rate decision. It is currently at 2%. There is an expectation, even though it isn't shown in this screen, there is an expectation, a forecast that there will be a quarter-point increase, so it will move up to 2.25%. So that's probably already factored in the prices, and if it doesn't end up happening, if they leave it at 2%, we'll probably see some dollar weakening. As I mentioned, the Fed have pretty much committed to increasing the interest rate 2 more times this year, and they are running out of opportunities to do so. They have this month, they have October, November, December. So they have 4 opportunities in which 2 of those they probably need to raise the interest rate if they're going to keep their commitments. And if they leave it till the end of the year, it's going to cause a little bit of concern, especially close to Christmas. So this month is a very likely candidate for one of those rises, and then it's going to be either October or November for the other one. I don't see a high probability of it being December, but you know what? I'm not the Fed. The same day, we have the Reserve Bank of New Zealand rate statement, their interest rate decision. No change expected there, but probably worth trading it nonetheless. So we'll square away the calendar as we get into the week. So by Tuesday, I'll let you guys know what we expect to be doing for Wednesday. Thursday, we have GDP out of the US and the CPC quarter over quarter, and we have the Tokyo CPI excluding fresh food year over year. None of those are something that I will be live trading. And on Friday, we have CPI out of the European Union, and we have the CPC again out of the US, this time year over year. Again, I don't expect to trade those, though that may change. I'll have to take a look at what the general feeling of the market is before then and make an executive decision. With that, we move on to our major pairs analysis, starting with the euro dollar. So we see that this week that just ended had the euro go up for most of the week against the dollar. And then the final 2 days were pretty much back and forth, which is precisely when we took those 50 pips twice on that last candle, just going up and down. Moving on to, well, I should say that with the euro dollar, we see that it has firmly crossed the level of resistance indicated by the cloud. And we may indeed see some more euro strength against the dollar before all is said and done. However, Brexit concerns are going to be weighing on the euro as well as on the pound. So the jury is out on this one. This one will be trading on the technicals and not looking for a lot of fundamentally driven action other than what's in the news cycle. Moving on to the pound dollar, no need to repeat what's been said. You can see that massive drop on the final day of the week, undoing about 4 days of gain, undoing the entire week's gain for the pound. And I would expect it to continue driving even lower, and in fact probably go back to that most recent low, which is going to give us brilliant opportunities across the board on all the pound pairs. USD/JPY, it is very near the resistance from the prior high, so it's very near that resistance at the top of the chart. I don't know what's going to happen with the JPY, an account that it is really going to depend on what happens in Europe. If the Europeans get spooked, money is going to flood into the Japanese market, making this chart try to go to the bottom. That will be a very nice thing to play, but we need to wait for it to happen. USD Canadian, it has been moving up and down on the daily chart, so very much trapped in sideways movement. It's had a couple of good weeks, mostly on the back of rising oil prices, and that is still continuing through today. So we'll have to continue keeping an eye on it. I've already said that if it does cross that line of support and stays under it, I see a really good shorting opportunity on the long term. So I'm keeping an eye open for that. And I may indeed enter it early based on what I see coming out of the news cycle, but not just now. USD Swiss, of course, is our darling in the long-term account right now. It does continue to make the lower lows, lower highs. Indeed, it made a lower low on Friday before doing the Friday retrace. This little bit of a candle is actually from today. That's already the opening candle right there, just flat. So we do expect this one to continue driving down. Not sure how far. My preference, of course, would be for it to get to the test of the trend line down here. Anywhere below 0.94 is going to be a nice, decent win for us on those long-term trades. But again, hopefully it'll drive all the way to the bottom. And then at some point, we'll start trading it all the way back up to parity to the 1=1 level at the top. That's what this pair does very consistently, bouncing between those two extremes. It's a very predictable pair, even though we don't try to predict. This one actually is the exception to that rule. Much like the Swiss clocks, you can set your watch to them. So this pair is extremely consistent in that behavior. The only open question, of course, is the time frame. The Aussie dollar continues driving towards the bottom. We can see the weakness that started in January, and since then it's just been driving down. As I mentioned, it had a decent week where it did regain some of it. Really hasn't broken that trend line. That trend line can be drawn as easily a little bit above where it is as it is below. It's just a general guideline. So it is still following that trend line. It has done the turnaround on the daily and likely is going to give us opportunities to trade it back towards the bottom as it makes a new and deeper low. So these Aussie pairs have gained our attention. They'll be definitely on our radar for the week. Kiwi dollar, same thing. It's driving towards the bottom. It's had a decent couple of weeks where it's recovered a nice chunk of what it had lost in the past month. However, it's very much at resistance on the Ichimoku cloud, the Kumo. It failed to even get far into it before the turnaround that happened a couple of days back. and another one that will probably give us a good opportunity as it tries to test the prior low or even goes below it. The Aussie Canadian, we're already in this trade on the long term. We already saw the turnaround happen. I'm a firm believer in Aussie continued weakness, simply because there has been no reason for the Aussie to get stronger at all. And of course, the Canadian is gaining benefit from rising oil prices, making this pair a perfect storm. I do expect a lower low, and we're already in this trade. Euro Swiss has been very sideways, so while we've traded it up and down here and there, and I think we've even gotten some profit out of it, it is not moving far beyond its current range. It does have a little bit of a gap there to the bottom, and we may indeed try to trade it, especially if Europe continues suffering the Brexit woes and we see the Swiss continuing to get stronger. It is very far away from the resistance of the Ichimoku cloud, however, and there is a good chance that there still may be a test of that cloud in the works before a further drop. But we'll be keeping an eye on it. Euro pound, again, another one of our darlings on the long-term account. And more importantly, it was the one that alerted me that the pound was making a move on Friday. We had a pending order on this pair that did get triggered early Friday morning. That beep actually woke me up, making me look at what had happened. And I immediately shorted a bunch of other pound pairs, and we gained a significant bit of profit towards the end of the week thanks to that. So that was just serendipitous that it managed to wake me up in time for me to trade this. And indeed, if the issues with the pound continue, I would expect it to head all the way to the top, to the prior high, which is our limit, or at least our initial limit. I may move that one before all is said and done, but that is the target right now, for it to go up about another 100 or so pips beyond what we've already gained. So I think 150 pips was our initial target. That may change, depends how strong that movement, if it does continue, how strong that movement is. Anyway, I'm very bullish on this pair, and we'll continue to try to trade it back towards the top as safely as we can. Euro JPY, and we are in this trade long, so we are expecting a little bit more of yen weakness before all is said and done. And that is pretty much that trade is close to break even. I think it's carrying a deeper loss than the other ones that are negative, but still very close to where we got in. It did do a bit of a retrace on Friday, but however, if that trend continues, then we're probably going to be looking at a decent trade. If not, then you know my approach. I expect to have losers here and there. So it won't kill me, but I do expect this one to continue performing depending on what happens throughout the week. Euro Canadian, this is another one that's offering a very nice gap. It failed to pierce the resistance of the Ichimoku cloud. It did its best, it failed. We know that we expect Canadian strength due to rising oil prices, and hopefully that will drive this one more towards the bottom. This is another one that I'm very eager to trade as the week commences, so I'll be looking for a good opportunity to get in on this one. Likely it's going to be a short-term trade, not a long-term one, as I think that the euro also has its own issues going on, and the mix of those two issues doesn't make me too comfortable. For now, however, I see it as a pretty decent short opportunity given the right conditions. Pound JPY, as with all the pound pairs, you see that massive drop into pound weakness that happened on Friday. However, the yen is also weakening, so it's already starting to do a bit of a retrace as the week starts. The trend is still an uptrend. It did break out of the channel quite decisively. It's crossed the Ichimoku cloud. So this one, if we continue seeing weakness in the pound and weakness in the JPY, may simply hang out sideways for quite a significant period of time. So we'll be keeping an eye on it, see if there are any opportunities, but it is not going to be top of my priority list. Aussie JPY, and we're already trading this one also into Aussie weakness. I'm sorry, into yen weakness. It did pierce the cloud, but on Friday that movement failed. It's open today with a significant gap, so it gapped lower, but even now it was already retracing as I took a snapshot of this chart. So it's looking like it's heading back into the higher realm of the prior high. Let's see if it has the strength to do that. So right now, open trade, we're long on it, and we'll have to wait and see what happens. Euro New Zealand, it is at a critical point on the daily chart. It is testing a long-running trend line. It's resting right on the trend line right now. On the break of that trend line, I would very likely try to trade it down to the cloud, into the channel, to the bottom of the channel. I don't care which one. This is a humongous number of pips that we stand to gain on the break towards the bottom. So another one that goes to the top of the deck for the week. Pound Canadian, again, the pound collapsed on Friday and the Canadian is getting stronger anyway. So this is another one that might be one of those perfect storms, and we do have in excess of 300 pips from where it is right now towards the bottom. We took a nice chunk of pips, as you can see from the red and blue arrow on Friday's candle. This was indeed one of those pound trades that we placed early Friday morning, taking advantage of everything that was going on in the news cycle. We traded 3 or 4 different pound pairs, and we made out quite well on all of them. So this is our last chart. And with that, we move into the setups in progress. Before I do that, however, I'm going to take a sip of something. Mouth is dry. Does anybody have any comments or questions so far? Okay. In that case, I will continue. Setups in progress for the week of September 23rd. The dollar pairs, the China trade wars are intensifying. There's been shots fired across the board between China and the U.S. on sanctions, or actually tariffs on different trade items. At this point, Trump is threatening to put tariffs on pretty much everything, including Chinese restaurants in the U.S., if you listen to what the news is saying. And of course, the Chinese are vowing to retaliate. On top of that, Russia seems to have sold a bunch of weapons to China. I'm sorry, it was the other way. Well, somebody sold weapons to someone anyway. There is still some embargoes on Russian trade due to the Crimea and Ukraine situation. So the Chinese violated those. Not sure that the U.S. has a leg to stand on what the Russians and the Chinese can do. But it does look like that is another threat that the U.S. is making, that they are going to penalize, sanction both parties for breaking those embargoes. Anyway, that will intensify all the Chinese situation. And if it does turn out to move poorly for the U.S., we may indeed see some dollar weakness throughout the week or even into next month. Euro pairs, the euro is starting to feel the Brexit pain, so not as critically as the UK, but we have seen some euro weakness return to the market on some of the pairs. And on some of those, actually, the euro is getting stronger. So it's been a grab bag, and that makes trading the euro a very cautious endeavor. So we'll be keeping an eye on it, but being very careful, probably short-term trades, and seeing what we can eke out of the market. The pound, you've heard it already, it's back to full-blown weakness, and I do expect it to continue giving up the irrational gains that it made over the past few weeks. There's also a good chance, based on everything I'm seeing in the news, plus the comments from people I trust in the UK. I used to manage New York Stock Exchange's operation globally, including London, which was one of our major hubs. And at that time, NYSE and Euronext were a single company. I still have a lot of friends in the London financial hub, as well as in the major European financials like Paris and Berlin. And all of them are pretty much saying that May's government probably has its days counted. There will either be a vote of no confidence before a month is out. And on top of that, they already have elections for the leadership of the Conservative Party in about a week or so, and it is not looking good for May. So there is quite a bit of a chance that May is going to be ousted before another month goes by. If Labor gets in, a guy by the name of Jeremy Corbyn, he scares the pants out of business because he's definitely leftist leaning, socialist and whatnot. Definitely not a business friendly guy. If Labor does get in and Jeremy Corbyn becomes the prime minister, the pound will drop like there's no tomorrow. So we'll be keeping a close eye on that situation for the opportunity to jump in and pretty much make our year. The Swiss pairs, the Swiss is looking, as I said, to be finally making a trip across the channel, at least on the USD Swiss. Likely, it'll also get stronger against the euro, so we'll be keeping an eye on that one, on those pairs as well. And the Japanese pairs, Abe Shinzo, the prime minister, was confirmed as leader of his party, and hence is probably going to be prime minister for another 2 or 3 years, making him the longest running prime minister in the history of the country. That does breathe stability into the Japanese economy. And of course, the yen stands to gain as any fears coming out of Brexit spook the European markets, making capital flow towards the Japanese economy. So the yen is also a key currency to keep a close watch on. And that, my friends, is the end of the presentation. My parting words this time, and it is a reflection of the last 3 weeks. There's no denying that we had a poor couple of weeks, but this week that just ended saw us recover a decent chunk of what we had given back. Now, important to clarify that what we gave back was profits that we had already taken. So basically, the market took back some of its money. Our capital so far for the year is not only intact, but we're still carrying profit across both the long-term and the short-term accounts. But the real message here is that, well, again, losing is part of the game. Sometimes you're going to lose. You're always going to have underperforming periods, but your winners should cover for those periods and then some. But the reason they do that is because we have a trading plan, and that's what we do. We have a trading plan, and it keeps us alive as traders. No matter if we're winning or we're losing, we're still following our plan. We don't get cocky when we're winning. We don't fall into despair when we're losing. We have a plan and we continue to trade. We trade our plan and we plan our trades. That's what we do. And our suggestion, of course, don't deviate. Well, first of all, have a plan. But once you have a plan, don't deviate from that plan unless you're going to be completely scrapping it and building a new one, which sometimes you have to do as you evolve as traders. But it shouldn't be happening every week. If you have a plan, stick to it, give it the chance to work. Anything under a year should not be causing you any significant concern. And your plan should have built into it something keeping your equity safe. There's no reason for you to lose your entire account due to a bad week of trading. If that ever happens to you, I'm sorry, guys. I don't have any gentler way of saying it. Your plan sucks. No plan should have you risking your entire equity in a short period of time. This is a long-term game. Time is on your side. We're going to be making tons of money over time. This is not going to be happening in 1 day, 1 week, 1 month, probably not even in 1 year. It's a gradual exercise, and as Callum loves to say, compound interest is going to be your best friend. It's what's going to make you a millionaire before too much time goes by. Well, some time is going to go by. Definitely not going to happen in a day. So that's it for me for this opening of the week. And with that, I turn it over to anybody out there that has any questions, comments, or concerns. And thank you very much. Oh, tough crowd today. Nobody wants to say anything. Well, okay.
Nothing so far, anyway.
Miguel.
Nothing so far. It's just We have continued CHF strength, choppy on the euro, definitely another turnaround on the GBP. And you said JPY pairs are you expect a turnaround or JPY strength now that Shinzo is prime minister or stability?
Yeah, so but again, the JPY is a curious animal. It doesn't move so much because of internal Japanese stuff, though of course that does matter. It
Mm,
moves more because it is a shelter, a safe haven for European money.
mm,
So the more the Europeans get scared, the stronger the yen is going to become.
okay.
That's just been something that always happens. So I don't know what to tell you with the yen. Could get stronger, could get weaker. That's why we wait to see what it's doing, and then we jump on the train after it has left the station. We don't buy a ticket for it beforehand. We're going to
Right.
behave like hobos running after the train and jumping on it.
All right.
The
I'll keep
hobo
it.
approach to trading.
All right. I'll keep an
Not
eye
even,
on it.
I have to get that URL now. Hobo trading. Anyway, thank you, folks. That's going to be it for me today. A recording of this will be placed on YouTube, of course, as we usually do. And I will see you guys tomorrow at noon Eastern Daylight Time. Have a great evening.